Hello, good morning. You're watching Buy Now Sell Now on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, very good morning to you. And markets are very flip-floppy. Red, green is the game going on in the markets right now.
Absolutely, Vinny. Good morning to you. But I think we'll all be very happy with the fact the way how the markets have recovered from the day's lowest point. A sharp recovery coming in for the benchmark indices, as you can see on your screens as well. We are near that day's high level, and we surpassed the 17,000 mark as well. Because at one point in time, we did slip below that 16,900 levels in the morning. Talking about what are the markets doing and what are the individual pockets in the markets doing, it's Nifty Bank that's moving in tandem with the benchmark indices. Key to know that Nifty Bank actually started seeing recovery a bit more earlier than the benchmark indices. So you have a Nifty Bank also that's trading higher with 0.3% uptick. Talking about the list of gainers today, you are going to see a lot of consumer names that are going to be actually ruling the charts. So you have BPCL, Titan, Nestle, HUL, Aisha Motors. They are among the top gainers on the Nifty as we speak. But on the losing side, top 3 Nifty losers are from the metal pack. So Hindalco, Tata Steel, JSW Steel, all of them are the top losers, with Hindalco falling as much as 4.6% as we speak. Talking about sectoral indices, and let me quickly take you through the sectoral indices. And Nifty Metal Index definitely is the top sectoral loser. 2.7% downtick coming in for metal index. It is the broader markets that are underperforming the benchmark indices today. You have small cap index that's still trading in the negative territory along with the mid cap index. But on the flip side, you have the consumption names that are doing well. So you have FMCG, I beg your pardon, pharma, as well as energy stocks that are performing well in today's trading session, Vinny. But yes, you said the markets have been pretty flip-floppy, and it is very, very difficult for investors to actually take with a call on their investments. So let me bring on board our experts for today. We have Kunal, Bothra, as well as Sharmila Joshi joining us this morning. A very good morning to you, Kunal, as well as Sharmila. Sharmila, coming first to you, like when he said flip-floppy markets, you cannot take a certain decisive call on the markets given the way how we are even reacting to global cues. And in such a market scenario, what should retail investors do to make sure their wealth is protected?
Interesting question. I think, simply put, there is obviously cause for concern. The way markets have been over these, I wouldn't just say the last week, because I think our troubles have only sort of increased over the last couple of weeks. But very honestly, over the last 3-4 months, the way markets have moved, the indication does seem to be that something, seems to have broken in our thesis of that you will sort of see markets in that range and move towards that 18,000 kind of level. So I would really advise caution at this point in time, and definitely I think you need to be buyers, because there is no way that anyone will be able to predict at which levels exactly markets will start turning. We do look like we are oversold at this point in time, but given the fact that the correction has come on the back of global cues, there's no telling whether markets will start turning now or later. So I think my best advice is to do a sort of a staggered buying, and to do the staggered buying in stocks where earnings are good and where earnings visibility, which sort of has the ability to stay strong in the coming quarters. So I think, and then just hold on to the good stocks that you have. This too shall pass. So I think that's the only way we can really protect our portfolio and our wealth.
Right. That's the view coming in on the markets. That's how you should be looking at the markets and protecting yourself from the markets as well in terms of volatility. But Kunal, coming to you, there's a chart and there's one commodity that has been just falling overnight, and that was crude. It's below that $75 per barrel mark as well. How are you looking at the crude chart now? What is it indicating?
So I think, good morning first of all, Vinny, to you as well as everyone. So my sense is that the crude chart is showing signs of weakness, but more importantly, the charts for crude beneficiaries, for example, the likes of Asian Paints, the charts over there are looking exceptionally strong. There are two classical signs which you look out for in terms of the charts. Asian Paints is the stock which I'm discussing because the chart indicates that the stock has been into a downward sloping channel for the last 5 to 6 months, at a point when the crude had actually started to top out, which means the crude beneficiary had actually started to get into a like-to-like correlation rather than anti-correlation or negative correlation for the stock. Now the stock has formed a base. And if you can see on the chart, the stock is very close towards a major breakout point. This could be a huge breakout for Asian Paints. Possibly, if the breakout sustains, then the stock can have propensity to even come back towards this life high levels as well. So I would be particularly looking out for this breakout point for Asian Paints. And if the stock sustains, say, current levels or maybe a couple of percentage points above the breakout zone, we could probably expect at least a 20 to 30% rise into the stock in the near to medium term.
All right, so that's the take coming in on Asian Paints. Remember, the Asian Paints has not done much over the last few months or so. But on that note, actually, let us kickstart with the query segment, and a big note for all of our viewers. Yes, we are not live on YouTube right now. We are facing some sort of a difficulty on that front, but you can definitely tune in to Twitter as well as Facebook, where we are live, or you can actually write to us on the WhatsApp number that's flashing on the top of your screen. We will be taking all of the queries that are posted on WhatsApp for now. So yes, continue writing to us, and do mention your name, the stock that you're looking to invest in. If you've already invested, then do mention the buy price, the quantity, as well as the time horizon that you're looking to keep a stock in your portfolio. That will help our experts help you better. So let me start with the first query that I have, and this one is coming in from, okay, let me take another one, wait. This one is coming in from a viewer, Mr. Subramaniam. He's writing to us from Chennai. He has 15 shares of Aptech at a price of around 295 rupees per share. He purchased this 3 years ago. He wants to know whether he should continue to hold on to this or look to shift to NIIT instead. What's your take on this one, Sharmila? Aptech, do you think now is the time to look to switch to NIIT instead?
No, I think he just sort of stay put in Aptech because he's bought it at a great price. And when you look at it from a valuation perspective or the kind of numbers that they did in the last quarter, Aptech seems fairly reasonable. So I would say just continue to hold what you have.
Okay, let's move on to the next query. And Kunal, we have this query coming in from Sandeep, and this one is on Manali Petro. They're holding 1,000 shares at a rate of around 66 rupees. What should they be doing with this?
I think we should look to exit the stock. It's at 63.5 or 64 levels. Maybe wait out for another rally of till 67 or 68, and that could be a good zone where you may look to exit, because the chart patterns are still looking quite down and out for the stock. It's going into a sharp downtrend. It's been unable to break past above the previous swing highs. So it may look attractive in terms of the oversold nature of indicators, but just the last 6-9 months of behavior of the charts indicate that this downtrend may continue. So I think it's a good strategy where you may look to just gain some mild profits on your existing holdings and then look to exit the stock.
All right. On that note, let us slip into a break on this edition of Buy Now Sell Now. When we come back.
Welcome back. You're watching Buy Now Sell Now on ET. Now let's keep it going with your stock related queries, and Sharmila, coming to you for the next one. We have Mohit from Ludhiana, who's holding 350 shares of Fortis at 270 rupees. They are willing to hold it for a period of 3 years. What should they be doing? Continue to hold it average?
Well, in this space, there are a couple of other names which I like better than Fortis. So I would really recommend a switch. I like, for instance, an Apollo Air, which would be a slightly larger name. But I think if you're looking for a slightly more mid-cap name, you can look at either, I beg your pardon, Artemis or Narayan Hrudayalaya, stocks like that, rather than being invested in Fortis.
All right, this one is coming from Suresh. He's writing to us from Kerala, and he wants to know whether it's the right time to buy Cochin Shipyard. What's your take on this one, Kunal?
Well, yeah, I think Cochin Shipyard seems to have been going through a corrective phase. If I'm not wrong, the stock has also come back towards slight oversold nature of indicators, and more importantly, the bigger retracement. So from I think 2022 lows, when the stock was sub 300, 283 to be precise, towards the point when the stock was above 650 level. So if you try and draw the retracement lines, the stock seems to have completed a 50% or 61.8% retracement at current levels of 437 approximately. So a good zone where you should look to accumulate as well as buy Cochin Shipyard.
Sharmila, Bishaka from Kolkata has 30 shares of Radico Khaitan at a purchase price of 810 rupees per share, as well as 100 shares of Zen Technology at 200 rupees per share. Is it a good time to book profits in both these stocks, or continue to hold it for a longer period of time now?
So, what has happened with a lot of these businesses in which Radico Khaitan is, which is the alcohol businesses, that very honestly, over the last couple of quarters, we haven't seen such good results from them. Briefly after the period, the first lockdown, we saw a lot of people sort of stock up, and you did see good numbers from a lot of these names, and that has sort of tapered off in the last couple of quarters. Having said that, this is a name that I like. So if he's a slightly longer term investor, I think he can continue to hold Radico Khaitan or else shift to United Spirits. I think both stocks are good. Coming to Zen Technologies was the other one, right?
Yeah, that's Zen Technologies.
Yeah, yeah. So here again, results have been fairly good, but I think the concern is more to do with the entire space, and that's a concern that's not going away in a hurry. So once again, I think that you may need to have a little bit of patience with both stocks.
All right. Just a quick note for all of our viewers, we are not live on YouTube, so you can write to us on the WhatsApp number that's flashing on the top of your screen. This one is coming in from Ramesh. He's writing to us from Delhi. And he has 4,000 shares of IRCTC. Sharmila, 860 is the buy price. What's the outlook for the next 2 years for this counter? Do you think the prospect is bright for IRCTC after the hit that it took during the COVID period because of the lockdown, that is?
Absolutely. And that a lot of businesses that they were talking of before we went into the pandemic situation and the lockdown, I think you will see a revival of all those plans. So apart from their monopoly, which we already know that they have on food, water, as well as the commissions that they get from ticket sales, they've also been talking of introducing luxury trains and a whole host of other services. And I think that perhaps you could see, the expectation is that you'll see all those rolling out over the next couple of years. So this is a stock that I like, honestly, but it does look like it's getting battered with the rest of the market, and maybe you could see a further correction from here. But my advice would really be to sort of stay patient and stay invested.
Okay, Kunal, this next query we have is from Deepak, and this one is on HDFC Life as well as Varroc Engineering. Now, Deepak holds HDFC Life at 691 rupees. Should they look to average this? And also in terms of Varroc Engineering, they are holding it at 450 rupees. So what should they be doing? Should they look to average both these stocks, or are you expecting a further more upside? And if yes, then how much more upside?
So HDFC Life as well as Varroc, I would suggest to average both of these stocks. Now I understand that the insurance stocks have actually gone through a sharp correction. HDFC Life has been a big underperformer from from the insurance names. But then just because of the fact that the charts are positioned, current levels of 465, RSI divergence set up on the weekly time frame charts, I would expect that sooner than later the stock would probably get into a recovery phase. So I would expect that the stock would probably come back to even 520, 550 mark possibly in the next 1 to 3 months. So keeping that as an outlook, I would suggest a buy on HDFC Life or an average at current levels. And so same would be the case with Varroc as well. 265 is what the stock is trading. I think yesterday the stock gave a price volume breakout just marginally above the 50-day moving average. So keeping that yesterday's price action move, I would suggest a buy as well as average on Varroc as well.
All right. On that note, actually, let's slip into a break on this edition of Buy Now, Sell Now. We will continue with the journey of taking all your stock-related queries after this break. Welcome back. You're watching Buy Now, Sell Now on ET Now. And yes, we are live on Twitter, Facebook, as well as on ET Now website as well, etnownews.com. You can find us live there as well. But write to us all your stock-related queries on the WhatsApp number that's flashing on the top of your screen. Let me take this next query that I have, and this one is coming in from Naga Kumar. He's writing to us from Hyderabad, and he's saying that he's purchased 1,000 shares of CG Power at 200 rupees per share. He wants to know what should he do? Should he look to book profit now or hold? If you advise him to hold, Kunal, he can hold for the next 1 to 2 years.
Well, I would suggest to book out profits, because the stock has already run up exceedingly high. CG Power has, I think it was a 5 rupee stock in 2020, had run up to 300 plus, currently at 288. I think that's the best seems to be behind the stock price, at least looking at the last 2 years of fabulous kind of returns for CG Power. So I think it's a good strategy to book out profits, majority of our profits, if not entire profits at current levels.
Okay. Sharmila, the next query is from Shatish from Kerala. They're holding 1,000 shares of Nelco at 380 rupees, 600 shares of Tejas Network at 484 rupees. They're a long-term investor. Could you please advise them on both these stocks? What should they be doing with them now?
Well, since they're long term for Nelco, it's a hold. There are, I think, various things that will happen over the next couple of years, which will be beneficial for Nelco. The last quarter numbers seem to be a little soft, so I think this the entire mid cap sort of correction that we've seen has taken, the price, stock price seems to have reacted to that. But given the fact that fundamentally this seems like a strong stock, I think for Nelco it's a definite hold. Coming to Tejas Networks. Um, Here, I think it might be a better idea to really switch to some other place.
Okay, this one is from Bhaskar from Bangalore. Kunal, 100 shares of LIC bought at IPO. Should Bhaskar look to average it at current rate? I know it's a very recently listed counter, but the stock has moved so much, it feels like it's been there for a while.
Yeah, it does, and I believe that at current levels of 575 approximately, I think it's a good zone where you may need to add LIC because the stock seems to be forming a triple bottom, in terms of RSI divergence over here, and there could be a higher probability that maybe very, very quickly the stock may form an immediate bottom or a base at current levels because of the fact that the RSIs are forming a triple divergence, and typically we've seen that whenever that happens, the stocks, they get into a strong rally phase. So purely in terms of risk reward and in anticipation that the RSI would hold on to the triple support this time, I think it's a good zone where you need to average further.
Okay. Kunal, we have Krishna Das from Bangalore who's holding 50 shares of BSC at a price of 750 rupees per share. Should they average it out right now or wait for some time to average it?
Well, I would suggest to wait out for some time. I think about that 490 mark. So probably you can keep a buffer of 500. Break out above 500 is where you should look to average because that's going to be a confirmation point that the stock has ended this 1 year out of sharp correction, and because over the last 1 year the stock has been making just a pattern of consistent lower highs and lower lows and has been unable to break past about the previous swing highs quite decisively. So the recent swing high was around this 494 mark. So above 500 is where I would look to average because that would confirm that the stock has completed a major downtrend and it's now going to a reversal phase on the upside.
Okay, Samrat has Yes Bank to 2,600 shares at a price of 19.25 rupees per share. Sharmila wants to know what's the future prospect for this one for the medium to long term. We know that the lock-in period for the shares have already opened as of March 13, but the stock definitely is under pressure.
Yes, and I think perhaps likely to be under pressure for some time. But I think given the fact that perhaps that the sell-off that now you will see will be something that it was sort of anticipated that this event would happen and what impact it would have on the stock price. So I think a lot of the negative sort of would be in the price. There is no taking away from the fact that perhaps the stock would spend some amount of time here, given that once you have so much liquidity coming into the stock as sort of people offload, and even if you have sort of good investors getting in, it simply means that the demand sort of dries up. So be prepared for that. But honestly, I don't think that this is a price that you should sell at. You will, I think, see higher levels on the stock, but you will need to keep patient.
Okay, let's move on to the next one. And Kunal, we have Prakash Bide who has 200 shares of ISGEC at 560 rupees. What should they be doing with it?
Well, I think illiquid stock, just if I'm not wrong, some 14,000 odd shares traded today for the stock at 467 where it's trading right now. So I think the sooner it gets to your buy price, better it is that you exit the stock.
Okay, this one is from Sudha, and Sudha, apologies, we've not been taking your queries for a while, but we'll take both of your queries today. One is on Mazagon Dock. Kunal, the stock is down approximately 20% in the last 3 months, and it has actually approached the buy price of Sudha's for Mazagon Dock. So she wants to know what should she do, look to add some more or continue to hold on to it, and the similar is the case with Century Ply. So she wants an advice on both of them. What should she do?
So Mazagon Dock, I would not suggest an average at current levels. I would probably suggest a wait for another 3 to 6 months because my sense is that Mazagon Dock could probably go into a time-wise correction. I'm not too much concerned about the price-wise correction because that 20% retracement has already happened. It is just that the steep rise for a major part of 2022, that has got to go into a time-wise correction, and that generally extends to 6 months to 1 year kind of a time span. So I would believe that it makes sense to wait out for at least another 1 to 2 quarters, for the stock. Let the prices get into a zone where the selling gets absorbed and the prices start to get into a recovery phase. That could be a point where you may look to buy or even average further. For Century Ply, I think at current levels, I would not suggest an average because the stock has broken below a major support. I think if I'm not wrong, 500 was the previous low in 2022 from where the stock had bounced off twice. It's broken those levels of 500. So would not suggest an average, but if in case the stock breaks past above 525, that could be a point where you should look to average.
The next query is on Infosys. Sharmila, Surat from Kochi is holding 120 shares of Infosys at 1,600 rupees. Should they look to average out a bit more right now? And maybe their time period horizon is 1 to 2 years.
Yes, so a little while earlier we were talking about mid-cap IT, and now we have a large-cap names, and I think it's very evident that the pain the sector is feeling is across the board, whether it is a high-cap, whether it is the leader in the industry or a smaller name, and you can see Infosys, the kind of correction that it's had, and quite close to, I think it's 52-week low if I'm not mistaken. Yes, I think the 52-week lows shows at 1355. So if you have, I think what we need to bear in mind is that everything that has happened over this last week sort of puts this entire space into even more sort of trouble, because earlier you were only talking of inflation. Now with the kind of run that you have, which is an important sector for IT, which is BFSI. So I think the short point is that that concern will remain for a while now on the sector. But if you have a view of a year and a half, probably you might have to stretch it a bit. But I think stay invested in Infosys.
All right, that's the take coming in on Infosys. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. Just a quick note for all of our viewers who are writing to us on WhatsApp. Don't keep reposting your query, because what's happening is it's missing the queue and we will end up missing your query. So you can write to us and be rest assured we will take your query, but we'll slip into a break right now. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let me continue taking your queries then. And this one is coming from Ms. D'Souza from Mumbai. On JSW Energy, is it a good time to buy at current market price, Kunal, or should wait for some more downside in JSW Energy?
No, I think it's a good time to buy the stock because I sense that the stock has come back towards a corrective phase from 350 plus mark. I think in 2021-22, the correction has been quite steep for the stock, and both a time-wise as well as a price-wise correction. So I think at 250 approximately, it's a good level where you can look to buy. I would expect 270 to be an immediate target over the near term, and possibly if the stock regains its uptrend, it could march back towards its all-time high levels as well.
Okay, Sharmila, we have Pradeep from Kolkata who wants to know on NTPC and Power Grid, between these two, which one is a better one for a long term to buy?
Honestly, I don't recommend.
Pardon me? We could not get your answer clearly.
I said I don't recommend either.
Okay.
Okay. The next one is coming in from Prashant. He's writing to us from Kochi, Kerala. Kunal, he wants an advice on SKM Engineering. Do you track this one? 750 shares he has at the price of 216 rupees per share.
No, not really. I haven't tracked it.
All right. By any chance, have you seen this stock, Sharmila? All right. Let me take the next one then. This one is from Ramaraju. He's writing to us from Vijayawada. He's holding Hero Moto 600 shares at a price of 2,513 rupees per share. What should he do with this one? What's your take, Kunal?
I would suggest to hold on. On the daily charts, I think if I'm not wrong, at current levels, the stock is forming a classic RSI divergence. So I think if that plays out, then there is a possibility that Hero MotoCorp may probably bottom out at current levels. So I think it's a good risk reward to hold on to the stock at current levels for Hero MotoCorp.
Okay, Sharmila, the next query is from Bharat, and he actually wants some names in the capital goods space other than L&T. Is anything looking attractive to buy right now?
Oh yes, I think a couple. One name could be BHEL. BHEL looks good to me, and of course, I think the stock has had a run-up, but given their order book, and I think now the focus will really be on execution. So that's a good stock. I think Thermax could be another stock. And very honestly, I think post budget, the kind of order wins that we've seen in a lot of names seems quite encouraging. But yes, I think you could start with these two names.
Okay, this one is coming from Karthik Raja. He's writing to us from Chennai. He wants a view on Bank of India. Sharmila, he's saying the stock is being beaten down over the last 5 trading session. Also is down more post his earnings. What's your view on this one? Do you think that this sort of a fall will stop for Bank of India? And if he's already invested, should he stay invested?
He can stay invested, but what you need to understand at this point in time is that, right? I think since January we've been hearing that perhaps sort of the best in terms of earnings is behind banks, because there was an expectation that this year could see slightly slower earnings. That said, I think for PSU the key question really remains whether the NPA picture will continue to stay that improving or good as we've seen in the last year. And I think yes, but the near-term concerns has been on the run that we've seen on banks overseas, and that is actually sort of it's really speaking, your banks are not affected, the banks in India are not affected, but it's just sort of a sentiment contagion hit that we've seen across this space. So that I think is likely to be more worrisome going forward, coupled with the fact that anyway people were expecting slightly slower earnings. So if you are ready to sort of wait for that wall of worry to, for us to get towards the other side, then I think you can stay invested in Bank of India.
Okay, on that note, let's get started with the rapid fire then. And Kunal, first query for you. Ravi is holding Bajaj Finserv, 500 shares at 1,400. What should they be doing?
Well, I think you should look to hold on to the stock as of now.
Okay, HDFC AMC, the viewer has bought 500 shares at a price of 1880 rupees per share. Sharmila, what should he do?
He can continue.
Dikshita is holding wants to accumulate Hindustan Copper at current levels. Kunal, is it advisable?
Yeah, I think at current levels of 95, good price to accumulate.
Okay, this one is from Akhil. He's writing to us from Delhi. Kunal, 995 shares of IEX at an average price of 184. Should he continue to hold? I believe you had a buy call on this one.
Yeah, hold, and if possible, you can look to even average.
Okay, Sharmila, S. Balakrishnan from Chennai is holding 1,000 shares of Kingfa Chemicals. What should they be doing? Should they continue to hold this for a long term of 3 years?
I'm sorry, I didn't track.
Kunal, any view on this one?
Don't track it, so won't be able to comment.
Okay, for the next 2 months, Voltas 950 shares, 500 shares and 950 rupees per share. What should Mr. Prakash do?
I think you should look to hold on to the stock as of now.
Okay, the next query is on SpiceJet, Sharmila. The viewer is holding SpiceJet. They bought it at 49 rupees, 5,000 shares. What should they be doing? Should they look to average right now or exit or hold?
I think they can continue to hold.
Okay, this was from Jai Krishnan writing to us from Kerala. MTAR Tech, is it a good buy for the medium term? Kunal, entry and target if possible?
Well, would not suggest a buy as of now. In case if the stock corrects towards say 1500, then it becomes a decent buy.
Okay, we have the viewer Sandeep who's holding ITC, HDFC and Cummins. Should they continue to hold this stock or shift to something like a BEL or Coal India, Sharmila?
No, absolutely continue to hold these 3 names.
All right. Does it make sense to enter mid-cap IT companies amidst this particular storm? This one is from Divya. Sharmila, what's your take?
Yes, but as I said, do a static buying and perhaps post numbers. So be a little patient, but yes, you could look to enter.
Okay, I'm just going to try and squeeze in a quick one. Kunal, 500 shares of Piramal Pharma. Shatij is holding it at 130. Should they continue to hold?
It's been a stock which has been just going absolutely on the downside. I think good time to exit.
All right, and with that, we've come to the end of the rapid fire, the queries and the show as well. Thank you so much, Kunal, as well as Sharmila, for joining us on the show and for taking all of the queries. And viewers, we've tried to squeeze in as many queries as possible. I know you're disappointed that we are not live on YouTube, but remember, you can connect to us on WhatsApp. But for now, Vinny and myself signing off. And yes, happy birthday to our director, Santosh.